welcome to our next call on Leaders in Housing Counseling. We're glad you've joined us. I think it's going to be a very interesting, valuable call, and I think it'll be one we may reference to in the future as well. I'm in Riverside, California, it says this morning. Afternoon to some of you. Matthew's still in Philly, but we've got a home buyer event that we're putting together with 9 terrific groups in Inland Empire, Southern California area. We're doing a great job. The event will be on Saturday, and I hope that what we learn from this one will also be able to present on a future call. Again, it's really trying to figure out how to get underserved homeowners home buyers into housing counseling. And as we're trying some new things for this one, and we'll be very interested to see how it all works out. But with that good note, we're going to have a fairly straightforward agenda today. We'll do some quick updates, but we'll spend most of the call talking about the homeowners insurance program that is in Massachusetts. We have Tom Callahan from MAHA, and I think a valuable model that we might want to think about trying to replicate in other states. And create opportunities for counseling programs. And then we'll do a quick plug for NHRC, and that'll be the call. Certainly, as we go along, put questions into the question box so that Matthew can pose them to Tom as we go along, and we'll make the most of the time we've got. So with that note, let's move quickly into what's happening on federal funding. Matthew?
Yep, not a whole lot to add since the call last week. Did just want to mention that the Senate is moving actually pretty quickly on their appropriations process. So out of the 12 appropriations bills, they have passed 7 already, and there's 3 more that they're marking up this week, and then that'll leave just the 2 that they're planning to do next week. That's at the committee level. They do also have on the Senate floor, they have for the last few days, what they're calling a minibus, which is 3 appropriations bills together that the full Senate, I think their plan is to vote on it this week. So the Senate's actually moving along much more quickly than they have in the past, and more quickly than the House, which is not typical. I don't think that necessarily means that we should expect, if the way things ought to go would be that they would, both the House and Senate would pass their bills, go to a conference committee and have some final bills before September 30th is the end of the fiscal year. I think given that there's the midterm elections in November, everything that we've heard is it's very unlikely that they would not do what they've done in the past, which is do a continuing resolution to carry them through the elections, and only then would they likely start moving bills. So I guess the bottom line takeaway is things are moving relatively quickly, but I don't think that necessarily means that the budget process overall is going to be moving more quickly than it has in the past. So we will keep folks posted as we go through this process.
Good, and I think that the critical issue for us is that, of course, the Senate only put us in at $45 million, and House at $56 million, $1 million bump up. Matthew's already reached out to David Young, our champion in the House, about preserving the $56 million when it comes to conference committee reconciliation, and to the extent that people in the House and Senate can be telling their representatives how their leadership, how important it is to get the $56 million figure. We'll bring this up more than once between now and then, but there's always a small chance that this might move faster than we expected. But any opportunity you've got, that should be the message. So great, Matthew.
Yep, yeah. Absolutely. And just on a separate legislative note, I'll just quickly mention, I don't think this came up on the call last week, it may have, but Bruce and I were on the Hill on the Senate side last week. We were meeting with Senator Hellers and Senator Scott's staff to talk about tax relief for people who have mortgage debt forgiven. So that's one of these. It's generally been included as what they do kind of end of the year. They call it a tax extenders package, and it's all various different tax legislation that ends up getting included. I mean, the kind of, and I know that's important to a lot of folks on the call who have folks who either have principal forgiveness or, principal reduction or short sales. So that expired January 1. Senator Heller introduced last year legislation that would make it retroactive to January 1 of 18 and extended out for all of 19. The kind of bottom line takeaway on that was Senator Heller's staffer was, I would say, pretty confident that it would get done. There's just some question about how exactly that happens. He seemed pretty confident, though, that that would happen one way or another, but with that as well, that it's unlikely to be before the election. It's extremely unlikely to be prior to the election. So that's, I know that that's very frustrating for folks. We are trying to have the conversation about making that permanent, which would obviously get rid of this, eliminate all of this uncertainty that folks have to deal with every year. I mean, it's anyone who's, in that scenario for 2018, it's not doing a whole lot for them to know that, okay, it's likely that Congress is going to act on this. So that's where that stands.
And the other nice thing was when we met with Senator Scott's staff, who's just amazing. They're really terrific. So Senator Scott's an African-American senator from South Carolina. They did a lot of praise on the role that housing counseling played on the getting the Brian Montgomery legislation through, the nomination through, and that HUD recognized that as well. So that's really valuable. So shout out to all your good work out there. And then the other thing was on the housing counseling NOFA. So we did get the letter out to Brian Montgomery asking that we know there's 1,000 things on his plate, but if they could prioritize getting the NOFA released, that would be valuable. We posted those on the list, but the letter did go out. We haven't heard a response yet, and we'll do some extra nudging, but we know it's a priority for everybody and a big frustration. Good. Okay, so let's go to the topic at hand. And this is all part of our series on innovation in housing counseling and thinking about what are the ways that we can broaden our work, still stay within the mission of our work, and serve our constituencies, but also the potential for generating new income sources. And a long-term program that's been around for a long time has been the Home Safe program that MAHA has championed and is sort of a valuable model. So we were glad that Tom Callahan agreed to come on and give us the rundown of how it works and how they got there, and the possibilities are of other locations doing something similar. So Tom, thanks for joining us.
Great. Thanks for having me.
All right.
So, welcome everyone, and we're excited to have this opportunity to present about this program. It's been a really great success for us here in Massachusetts, and it's a program we've long thought has the opportunity to expand even within Massachusetts, but certainly to other states. And so hopefully this call can maybe spark some of that thinking about bringing a similar program to your state. So let me just start with a couple sentences about MAHA. We are a nonprofit housing counseling organization, as you might expect being on this call. We kind of an interesting group. We wear two real hats. We have a full service home buyer and homeowner education program and counseling program, from pre-purchase education to post-purchase education to foreclosure prevention work. So we do all of that work. The other half of our shop, if you will, is community organizing, and we do a lot of work with city and state government, with banks around CRA, Community Reinvestment Act agreements. So we are very actively organizing first-time homebuyers into a constituency to demand more affordable homes here in Boston and in Massachusetts. So, as well as access to affordable mortgages. So that's kind of who we are and what we do. HomeSafe really was, next slide, was an outgrowth of the work we did in the late 80s, early 90s around bank redlining. So we, along with several partners here in Massachusetts, did a campaign from 1989 to 1991 that focused on the banks who were named in what is now locally a famous report in the 1989 Federal Reserve Bank of Boston redlining study, which said the banks were guilty of racial discrimination in mortgage lending in Boston neighborhoods, and had been for decades, really. That led to this organizing opportunity where we ended up reaching agreement with several banks around a variety of things, from opening branches to doing below market interest rate mortgage program. So that mortgage program started in 1991 and got off to a good start. And over those first couple of years, we realized that we had another problem on our hands. Our new home buyers and new homeowners who were going through that program in 91, 92, 93, kept coming back to us and saying, hey, how come I can't get insurance? I got a loan from a bank, but no insurance company will insure my house. And I'm being put into this thing called the FAIR Plan. And that was kind of news to us at the time. We were learning about insurance redlining as well. There were attempts around the country. Congressman Joe Kennedy, the father of the current Congressman Joe Kennedy, was leading efforts in Congress at the time to require, trying to require HMDA-like disclosure from property insurance companies, and talking about things like extending CRA to insurance companies because of redlining. We realized firsthand that was a reality in many neighborhoods of color here in Boston, and we kind of put our heads together with a bunch of different players and tried to figure out what we could do about it. So this program is got a lot of parents, if you will. Our organization helped start it, obviously, but we've been supported by a quasi-public agency in Massachusetts called the Massachusetts Housing Partnership, who provides ongoing support. The City of Boston and Department of Neighborhood Development, which is basically their housing department, has been extremely supportive. They were actually very helpful in helping us write the curriculum. And then the Mass Property Insurance Company, Mass Property Insurance, it's actually, that is the state's FAIR Plan. It's the Mass Property Underwriting and Insurance Association. There's about 25 states. If you live in a state with a major city, most likely you have a FAIR Plan. Some of the rural states do not have FAIR Plans, but most of the states with urban areas have of significant size have FAIR Plans. They were started after the after the assassination of Dr. King in '68, and they are, if you're not familiar with their FAIR Plans, they are often considered the insurer of last resort. They were started because the voluntary insurance market pulled out of many neighborhoods of color after the '68 riots, and really didn't come back. And so there were state governments all around the country were left with the problem of what to do about that. And the FAIR plans are essentially, at least how they work in Massachusetts, are a consortium of all the insurance companies that write business in the state. So they are forced to participate in the FAIR plan, and it's a pooled insurance for people who are having difficulty getting a private company to write insurance. They were under some pressure here in Massachusetts because some of the organizing campaigns Maha and others were involved in. So they ended up being an initial sponsor of this HomeSafe initiative and put some money in for the startup period, the first 2-year startup period. Well, I'll go into that a little more detail. So you can read the slide. It's basically this resource center that we have developed with the central feature of the resource center being free classes that and we'll go into the curriculum but they're targeted at new homeowners in the first year of homeownership. So, and we've been doing this since 1996, so 22 years later, the program is still growing and going strong. Next slide. So this is a little more what I was talking about, the context where we started this program. In 1994, the National Association of Insurance Commissioners, which is all 50 insurance commissioners participate in this body, and they did a study that showed that our plan was writing more than 60% of the policies in neighborhoods of color, and Roxbury, which is at that point was a heavily African-American neighborhood in Boston, upwards of 82% of the homeowners had their insurance written by the FAIR plan. Clearly a strong sign that the market was not working properly. Another thing that was happening in '94, NeighborWorks had convened the National Insurance Task Force and established these loss prevention partnership programs, which were similar to HomeSafe in a lot of ways. They were various efforts around education with insurance companies. So we, in part, modeled some of our efforts on what they were doing at the time. We actually applied to be part of that loss prevention partnership program, but were not selected, or Boston wasn't selected as one of the cities for that program. So what's not on this slide, but I wanted to give a shout out to Bruce. Also at this time, Acorn in Philadelphia had established, probably to our knowledge at least, the best sort of partnership program with insurance companies, where they were doing some education and had successfully engaged with the insurance industry. So we also borrowed liberally from what Acorn was doing in Philadelphia at the time. So Bruce maybe later can go into that. And then we were pursuing efforts over that period. It passed in 1996, but it was, as you might imagine, a couple-year effort where we were pushing our legislature here in Massachusetts to pass essentially a Home Mortgage Disclosure Act law for insurance companies. What we ended up getting was not quite as good as the HMDA data, but it was zip code level disclosure from the bigger companies. That did pass, that's in effect, and that we give that law a lot of credit for creating the environment, creating the incentive. Even though there's nothing in that law that says insurers have to do more business, just the fact that that information is disclosed to the public every year was, at least for some of the companies, enough pressure for them to say, hey, how do we improve our record in insuring urban neighborhoods? Next slide. So we were able to launch that program right around the time, not coincidentally, but right around the time the legislation was passing. 3 companies stepped forward and really launched the program. And then over the next 3 or 4 years, we steadily expanded the program in terms of number of insurers. I always tell the story of Liberty Mutual. They were not one of the first 3 insurers in. They were very active and interested in the program from day one, but they never joined day one. And it took them probably, I can't remember exactly, but probably 3 or 4 years to get comfortable with how the program was running. And they eventually did join the program and are continue to participate in the program now. So over the next several years, 1 or 2 companies each year or so would join the program. So we eventually got up to 11 insurance companies, but we expanded it to different geographic regions. In '99, we, with the assistance of the Mass Housing Partnership and their funding, we were able to expand it statewide with 10 different nonprofits participating just in 2010. Next slide. So what is HomeSafe? It's really modeled after our pre-purchase classes. So I know a number of you do pre-purchase homebuyer education, maybe all of you. And so we've shortened it. We here at MAHA do a 12-hour pre-purchase class. So this is half the time. It's 6 hours, generally over 2 sessions, although we do deliver it as a 9 to 3 session on Saturdays as well. But it's generally 2 weeknights that it's delivered. And the curriculum focuses on a number of things with a particular emphasis is the curriculum was written in a partnership form with City of Boston, with insurance companies at the table. So loss prevention is a big feature, not the only thing we focus on, but obviously in order to qualify for discounts from insurance companies, the insurance industry wanted us to focus on helping educate homeowners on how to reduce the risk of having an insurance loss on their property. So we talk about repairs, maintenance, identifying risks in your property, understanding what your insurance policy covers, what it doesn't cover, what riders you can get to for additional coverage. We have an insurance agent, an independent insurance agent that comes in and really allows people. We thought that would be the most boring part of the session. It's not. People actually appreciate if you have the right agent in the room, once he or she starts getting into the mortgage, to the insurance policy, we find that that's an interactive session because people don't think about their insurance policy very often, and this is an opportunity for them. They're sitting through the class anyway, so you've got a captive audience, and people end up having lots of questions about things they maybe partially understand or didn't fully understand going into the session. But we focus a lot on the risks to your house from an insurance point of view. Crime and fire safety certainly is one of them. Water is another one. Water is typically here in Massachusetts, whether that's water as in terms of rain or water in terms of frozen water and snow, but that's the number one sort of enemy of your home, as we talked about in the class, and talk about people giving people tools to how to keep water out out of their home and from destroying parts of their home. So, but we've built in a bunch of other things that go well beyond the loss prevention aspects of energy efficiency, budgeting, and keeping with our mission to try to keep people in their homes long term and paying their mortgage and being in a solid financial position. We talk a lot about budgeting after homeownership. A lot of folks have done a great job of really saving for their down payment and getting their credit in order pre-purchase. And then we talk about all the temptations people face as a homeowner to maybe it's a bigger house, maybe they need more furniture to fill up those rooms in the house, all the sort of seductive lures of being a homeowner and spending money and basically trying to get people to talk about not falling into that trap. So you can see some of the other things. We talk about lead paint and other household hazards, understanding how your heating and cooling systems work. We have a fair amount of condo owners, so we actually have this class is divided into two really classes. We have a class for homeowners of 1 to 3 family homes and a class for condo owners specifically because the issue with condos are usually very different and interacting with condo associations and that type of stuff has its own attraction basically. So we separate that out into a separate class for condo owners. Next slide. So here's some of we've been doing this since '96. We've done, together with our MHP funded affiliates around the state, we've done over 800 classes with over 14,000 graduates since 1996. The pace has actually picked up. When we first started, we graduated about 250 people per year. Last year, I think we had a record high of MAHA graduated 900 people just in our classes alone last year, and our affiliates, I think, graduated another 300. So we're now reaching over 1,000 homeowners every year. Next slide. And here's some of the data we're particularly proud of. Comes with a little asterisk here of we've gotten to know some people in the insurance industry fairly well over the last 20 years, and some of them would be the first to point out that these are, from an insurance actuarial point of view, these are very modest numbers. So a handful of fire losses, total house loss could skew these numbers, but we've been very fortunate that every time we've gone back to the participating insurance companies and collected data, the data shows that our homeowners who graduate from these classes are really performing quite well. So this may be new data for you to look at, but approximately 3,000 policies in force. Those folks are paying premiums in those policies of $2.6 million. They've had 141 claims, totaling $600,000 in losses. The loss ratio is 23%, or 23 cents on the dollar, essentially. And the loss ratio for the industry over that same time period in Massachusetts was 42 cents. So not quite half, but substantially below. So essentially, the insurance companies are making more money off of these home safe graduates than they do on the typical homeowner policy. By the way, the industry, I think most industry executives would say 60 cents on the dollar is essentially their break-even point. If they pay out more than 60 cents, they're probably losing money, given they have to pay their staff and executives and offices, maintain their offices and stuff. So 60 cents paying out in claims. Under that is considered a profitable year. Over that, they're either breaking even or losing money. So 43 cents or 42 cents is a very good year, very profitable year for them. 23 cents is an extremely profitable year. So that our folks are good risks, and we knew from our experience with banks that would probably be the case, but it was great to see that our homeowners are experiencing less losses than average. And those are some of the top causes of loss by claims and by dollar amount. And you can see water leads off both of those lists. And this next slide is just a more detailed description of where the claims have come from. 26 from water damage. We're certainly in the New England winters up here, and ice dams are a big deal. Preventing ice dams is tricky sometimes, and that typically causes a fair amount of the losses that we see here in New England. Next slide. So this is where we are now. 11 different insurance companies are participating. We've had great partners, public sector partners, the City of Boston and MHP, Mass Housing Partnership. And I will say we've also, once we got this program up and running, we went to local retailers, hardware stores, paint stores, and other kind of home-related businesses, home and garden centers, and gotten several of them to also offer the discount. So people get a little card, laminated wallet-sized card, and those they can show those at some of these local businesses and receive a 10% discount on their purchases, supporting some of the Main Street businesses here in Boston. Like I said, reaching over 1,000 homeowners. One of the things we did over time is worked with our partners at the city and state to require this post-purchase class. So our little secret here for there's really a couple secrets for how we've grown the attendance. And last year we actually graduated more people from our post-purchase class than our pre-purchase class. So the discounts clearly are very attractive to people. They can save money by attending this free class on their insurance, but also we've gotten the city and state to make it a requirement of accessing certain mortgage programs or down payment assistance. So that has, even though that's really not enforceable, they're not going to call the loan because somebody didn't come to the post-purchase class. People signing that at closing saying they're gonna, in the first year, sign up for a class helps push people towards checking out the opportunity to take the class. And as I started, we think the world of this program. We've had a lot of success with it, and we would love to see it expand to other states. We've historically had some conversations with groups and with both insurance companies and groups in Rhode Island, New York, California, but it's so far as I know, just a Massachusetts program at this point. So I'll stop there.
Well, terrific. This is excellent, Tom. I think very exciting prospect. I think we as NHRC would be interested in trying to think about how we might leverage these relationships in some other localities and create some of these opportunities for local groups. So a couple things I will mention. One is so understanding the difference between FAIR Plan and conventional homeowners insurance. My information is a little bit old, but when we did this in Pennsylvania, essentially Fair Plan was a much more basic level of coverage. So it did not have personal property included. It did not. It was the market value of the property, meaning what it would sell for, not for what it could be replaced for. And what's very valuable for the kind of insurance that MAHA did and which the old Acorn Housing Program did was that it got you access to the replacement coverages. And that would be that regardless of the market value, it would you essentially get the house or a similar house rebuilt. You might lose a few of the historical features in the Boston or Philly market, but you're going to get a similar quality of life replacement. And they also had a very valuable feature, which we often saw as a big issue, which was that they would pay for a place for you to stay if your house wasn't habitable for some period. I think it was 6 months, whatever the period was. It was to allow you not to have to pay both your mortgage and a rental place. And I know we saw people essentially lose their houses because they couldn't afford both. And Fair Plan does not provide those coverages. And it might be different in different states, and it might be slightly updated. Yeah, go ahead.
Yeah, so I think that's the only thing I would say. Versus one thing I have learned over the years is the Fair Plan coverage does vary quite a bit from state to state. We actually have a pretty decent Fair Plan here in Massachusetts, which is actually it's so good or so decent that it's hard sometimes to get people off of the Fair Plan. But every state has a unique sort of Fair Plan, and I think your experience in Pennsylvania is more the norm than the Massachusetts experience, where typically if you're on the Fair Plan, you're getting in some way limited coverage that's not as competitive with what the voluntary market can offer you. So that's something for people to explore in their own states.
Absolutely. Well, that's a good filter to think about as one of the places where there are opportunities.
Yep.
Well, that's fascinating. In the program that we did, it was essentially in Philly. If you picture Philadelphia housing, you picture row houses. And so we did the classic fair housing calling up and having asking about getting homeowners insurance. And what we found was a number of the insurers said, we'd be glad to do it, but you've got a flat roof, and we won't provide. We don't insure flat roofs. Well, not every house is a row house in Philadelphia. So Chestnut Hill has peaked roofs. Society Hill has peaked roofs. But if you're looking at low and moderate income, working class Philly, if you're looking at communities of color, you're looking at heavily flat roofs, and essentially you couldn't get, at the time it was HO1 insurance. I know it's called something different now, but you couldn't get the more expanded kind. And so everybody had to get Fair Plan. And one of the things that we really built the program, we were trying to compete, and one of the things we found quickly on was that people, as Tom mentioned, don't think a lot about insurance. So once they've got it, they think they've got it, and don't really compare and stuff like that, don't realize what the shortcomings are. But it was awfully hard to move people off of existing policies. And what we where we were much more successful was people when they first had to make their choice. And yes, homeowners insurance was more expensive through this program. You did get a 10% discount, but in fact, it covered you much better. And because you have a trusted relationship, those sorts of things, I think that was where we had the highest impact. But I think it's really a great idea, this idea that you've got about building it into existing programs that require you to get down payment assistance to also go to this class. And then also you expanded the model. Some ours was very much oriented towards just the issues around homeowners insurance, your model is more of a post-purchase model, and that I think adds an extra piece of value. One of the things we did in our class was to show people where your shutoff was on your water, so that if you have a burst pipe or something's going wrong, you can always figure out how to limit the amount of damage done. I mean, there was a whole lot of sort of practical life things. We had a map of what a row house typically looked like and where you could find your various checkpoints. And we had a requirement that you would have a small fire extinguisher. And the idea was to stop those small fires, kitchen fire kind of things. But our experience was completely similar to what yours is that when you ask people, what do you think the most common thing is, people would say, oh, break-ins, and no, that's not it. Oh, fires, oh, no, that's not it. It was water damage. And on the flat roofs, all the water would drain to one corner of the house. There was a drain pipe there on the roof, and when that gets clogged, water would puddle up. I mean, those kinds of things you could really help solve just by simple education.
And I think this program has had a small role in, and I think the disclosure law has had a bigger role in helping insurance companies understand that there are good risks in urban neighborhoods, and those percentages of fair plan percentages, for the most part, have come down. They haven't come down as far as we would like to see them. So some of the neighborhoods that had 80% fair plan market share may have 60%, or if they had 50%, they now have 40% or whatever. So they have moved in the right direction. They have not moved rapidly enough for our liking, but they have. I think the disclosure law and the combination of this program and the disclosure law has introduced, just like the banking industry has been introduced, the fact that low and moderate income homeowners or home buyers are good business. Well, I think we're doing that kind of one homeowner at a time here with the Home Safe program. And some insurance companies, as you would expect, get that better than others and understand that and respond to that type of argument but we keep trying and keep working to try to expand the number of insurance companies that will get involved with programs like this.
So, Matthew, are there some questions in the box?
Yes, there are. And just a reminder to folks, we've had a good number of questions come in, but if folks have questions, you can put them in using the question box. There's a couple just really big picture questions that we'll start with, Tom. So the first a number of people have asked is, if folks are interested in trying to launch a program like this, do you have information? Do you have ideas? What would you tell folks who are interested in a similar program?
Well, we'd be happy to talk to people. My email, which I didn't put on here, is tcallahan@mahahome.org, and maybe we can share that.
I'll put that in the chat box now, but and we can send it out separately.
And but we'd be happy to share what we have learned over the years. My colleague Jorge Casas has been here for almost 20 years, and or I guess 17, 18 years, and he's done all of the classes in that time period. So between myself and Jorge, we would be happy to chat with folks to give you some initial sort of guidance on where to go. Maybe, there are a few national insurers that participate in our program: Liberty Mutual, Travelers, MetLife, Mafre, which is not completely national, but is on the West Coast and in the Northeast and a little bit in the Midwest. So there's some potential sharing of contacts with insurance companies too, because I think once the insurance companies offer this type of program in one state, it's an easier ask to get them to expand it to another state. I think, you know, they did have, all insurance companies had to go through a process with our division of insurance where they had to file for permission to offer a discount. And so they have to state what the program is and submitted our curriculum, and there is a little bit of a process with the state regulators to go through, but we can talk you through that. Happy to invite anybody up to Boston if you want to take a trip or if you're going to be here. And we do 3 of these a month. There's almost always, if you're going to be in town, hopefully there's going to be a class that we're doing that week or whatever, so that we'd love to have you come and see it in person. There is no online version as of yet. This is all in-person group education.
Great. I may pop by for a class when I'm in Massachusetts.
All right.
So this is just a comment, but from Susan Kotner at HomeSmart New York said that HomeSmart New York has buy-in from the New York State Department of Financial Services to allow homeowners to receive an insurance discount for taking a post-purchase class. They're working to present a curriculum to the state for approval, and they're working with eHome. So it sounds like things are moving along well. And
yeah, and Susan was one of the people that when I mentioned New York, Susan was, we had some conversations with her and her colleagues, I believe, a couple of years ago. So I'm glad to see that's moving forward.
Great. And the other kind of big picture question is, folks were just kind of asking about the finances of it. I think you said it's a free course. How do you fund it, and do you get subsidies from the insurance companies? If you could just talk about that.
Yep. Sure. It is a free course. Over the years we've thought we actually could charge for this, but right now it's largely supported with 2 service contracts, one with the City of Boston and one with the Mass Housing Partnership. So the City of Boston helps support the classes that we do within Boston, the boundaries of Boston, and MHP, Mass Housing Partnership, supports the classes outside of the city. So we have a fairly large service territory in the greater Boston region. So the requirement, particularly the Boston contract, requires us to keep it free, at least for now, although we've have had some discussions with them about instituting a charge, maybe a $25 fee, because it has proven to be so popular and there's enough value what people get out of it to be able to charge. But we couldn't do that without the support of those 2 public sector partners. The support from the insurance industry is a little more mixed. We've had good success with one local insurer who is a major supporter of the program. So they provide a grant, $30,000 grant for us every year. So but only one of the 11 insurers funds us in a significant way to help continue the program. They're Arbella Insurance, which is a company who kind of gets it, I would say. And we do get some very small contributions in the $1,000 to $2,500 range from a couple of other insurance companies, but nothing that would support a program, obviously. But so the combination of some insurance money and some of the public sector money helps us support the volume of classes that we're doing.
Great. And Arbella Insurance also sponsors the Red Sox, so they clearly do get it.
Yeah,
so
well,
just a couple of more specific questions then. So are there any services to help people navigate if they actually have to file a claim? Is there any kind of follow-up services available?
Well, we do offer sort of one-on-one follow-up services in terms of, we get a lot of, usually it's phone or email sort of kind of follow-up where people have some sometimes it's referrals to, there's a nonprofit called Mass Energy, which is a low-cost oil. It used to be called the Boston Oil Consumers Alliance, and it's for folks that heat with oil. It's a way to get discounted oil heat in the winter, and so we have we often are referring people out to sort of existing resources. City of Boston has a HomeWorks grant and loan program for people doing home repairs. So we end up doing a lot of follow-up work that way. We have not, we encourage people to just deal with their local insurance agent in terms of claims, but we have not involved ourselves or haven't found the need to involve ourselves in helping filing claims. Typically, Massachusetts might be somewhat unique. I don't know what the situation is in other states, but the vast majority of our policies are written by a company through an independent agent. So those independent agents tend to be locally based, and the good ones, at least, provide a lot of hands-on, sort of consumer services to help people navigate the claims process successfully. So it's one of the things that gets talked about in the classes as opposed to Geico and some of the 1-800 services that sometimes those might be a slightly lower premium, but you also don't get that assistance that you would from a local independent agent. So we're not sneering people as independent agents, but we focus on comparing not just price, but comparing the level of service that you could expect from your insurance company as well.
Great. And then the last question, unless we have any others come in, is whether folks are primarily attending voluntarily or because of the insurance company DPA requirements.
Yeah, good question. It's a little hard to tell because there's mixed motivations, but I have to say one of the things that's pleased us over the years is the level of the number of people that just come because they heard about it and they didn't access one of these programs. Some of our better insurance agents around the area have taken to promoting it as kind of, there's cross promotion, right? We're out there promoting it, but they end up telling a lot of their customers that this is something they might want to take advantage of just to save a few dollars every year. So we have been pleased that some of the volume we see is from people who have no one's pushing them to take the class at all, and just heard good things about it either from their agent or from a previous graduate. So I think I don't have hard numbers on it, and I think certainly of the people that are doing it because their program, they signed a document at closing saying they would. We used to sort of compare notes that occasionally there'd be one or two people in every 20, 25 person class that would have a chip on their shoulder in the first 20 minutes of the class, and inevitably those people by the end of the 6 hours are walking up to Jorge and thanking him because they learned some stuff that they didn't anticipate learning. So we feel like the word is spreading somewhat word of mouth too, and if you want a discount on your insurance company from your insurance company, this is a good thing to check out. So it's a little bit of a mix, but I hope that's a good question.
Great. We did have just one more question come in. Can you just clarify on timing? So for home purchase, insurance is chosen prior to closing.
Yep.
Then would a homeowner switch insurance after taking the class or at renewal?
Another great question. So I should have mentioned this when I went through the presentation. every class is a mixture of true homeowners, people who are, 6 months into their tenure as a homeowner, and we have a healthy number of people who take the class prior to closing. So there's no requirement that you already have to be in the home to take this class. So typically, of the people that are graduating from our pre-purchase class and know that they're very close to buying a house, or maybe have a purchase and sale contract, or know they're going to be closing, typically those folks will follow up immediately and take it pre-closing, and indeed try to get that discount in year one. Other people, yes, might be in a position of switching insurance companies, or if they may be fortunate to have signed up already with one of the 11 companies that offer it, so it's really not much of a switch. It's just an additional discount that gets applied. But yeah, the smart play is to, if you can, to, I mean, I guess we'll say, I started to say the smart play is to take it pre-purchase, but we are of two minds about that, and obviously that is the smartest play to get that first year discount. On the other hand, we do see some value of having a class full of folks that have dealt with 6 months or a year of being a homeowner, because as I think a number of us often like to say, you start thinking a little differently as a homeowner, and you may have already dealt with some hopefully minor issues in your house, but you're starting to learn about your house already in that first year of homeownership, and you can come with different questions and with maybe a different ear to some of the material that's being presented in the class. So we like that newly experienced homeowner taking the class. So, but basically, ultimately, it's the buyer's choice or owner's choice of when they take it, pre-closing or post-closing.
Well, that's great. This is excellent. I've been very helpful. So I think we may be interested in trying to figure out some way to NHRC might be able to help shepherd some of this through with some locations. So if there's a locality that is particularly interested, please shoot us an email, and we'll do some thinking about if there's some ways we might be able to leverage our relationships here to do something in other locations outside of Massachusetts. And certainly if there are other places that have positive experience or tools, we'd love to hear about them as well. This could be an area that could be helpful for groups. Good. Well, thanks so much, Tom. Great work. And we'll continue talking with you.
Great. Thanks.
So we're going to quickly close out the call, but just to say we've had a great year in terms of groups joining NHRC. We are really pleased with the successes the organization has had, and also the role that so many of you played in the field to help elevate our work, getting not only the housing counseling data fields into the mortgage application that's going to be starting next year, but also language preference, our recent role on Brian Montgomery's nomination, and groups really stepping up on that, increasing the visibility of our work as a result. All the work we've done around funding and preserving funding, and then of course tons of the informational stuff. And then there's the ever popular deep discount on that we get on credit reports for people that are members. So we've had a strong year of membership, and look forward to, if your group hasn't joined, to take a serious look at it and join us. Shoot me an email if you want the application, or it's on our website. And we are we're doing quite well. We're also doing great on renewals this year. So it's been a very, very good year in terms of membership, and we appreciate it, and hope those of you that haven't jumped in use this summer to do that. let's see. Our next call will be. We're going to hop and skip over 4th of July. Our next call will be on the 12th, and we're going to take another run at the technology issues and challenges. We'll have some leading thinkers in the field and maybe a little bit of innovation. So we're going to have a conversation on that, and we've got a number of calls around those themes that we're trying to line up. But this one will be a bit more of a freewheeling conversation about what we need to do as a community in terms of moving our technology capacity forward. So look forward to joining you on that call. And if you have some genius innovations on technology, please shoot us our way so we can help feature some of those. All right. Thanks so much, everybody, for joining us, and have a good summer.